And we're live. Welcome back to another Gimbal Weekly Update. I'm going to just start it off myself, Amanda Repass, with the disclosures. Content provided at the event is for general information only, not intended to provide specific advice or recommendations for any individual. Any performance reference is historical and no guarantee of future results. All indices are unmanaged and may not be invested into directly. Any economic forecast set forth in the event may not develop as predicted, and there can be no guarantee that any strategy will be successful. These thoughts and opinions are those of Gimbal Financial and do not represent the views of LPL Financial. Securities offered through LPL Financial, member of FINRA, SIPC. Investment advice through Gimbal Financial, a registered investment advisor, and separate entity from LPL Financial. Good morning, Keith Tyner.
What's going on, Amanda?
Oh, it's a great day to be me, not gonna lie. And good morning, Doug.
Hey, good morning. We're missing somebody today.
Deborah.
Happy birthday, Debbie.
Yes, exactly. Debbie had a birthday yesterday, and she's taking.
Was that 29?
Today. It was well, maybe even 21.
All right. All you viewers, reminder that we said that.
I know she spent part of her birthday riding her bike with her husband Jeff up the Monon, which was pretty cool. So we've had a couple people stop by on their bicycles. If you're ever near Gimbal World headquarters and you want to go on a bike ride, make sure you stop by because we have the world's best espresso machine here. And we can make you a smooth cup of coffee before you go or when you get back.
I'd even say if you want to go on it and you've got a bike rack and you've got your bike hooked up to the back, feel free to park your car here and jump off. We're only, a 2 minute, not even a 1 minute ride to the Monon from here.
Yeah, I'd say 2 blocks, right?
Yeah. Yeah, you can be on it in no time.
How is everyone this morning?
I'm doing great. I sat in a training session on knee replacement surgery yesterday, and I'm motivated to eat healthier so I can keep my knees as long as possible.
So whose knees were you consulting? You probably can't even say that, but they're not your own.
They were my uncle's knees. They from the picture I saw, they look like they fit together like you would put masonry together on a house without the concrete in between the bricks. They're just brick to brick. And so 2 weeks from now, he'll be like new. It's modern technology that can change somebody's life, and something as simple, well, it's simple today compared to 20 years ago as a knee replacement.
Well, and you know what's amazing about that is, a lot of the weekends, my family and I will go up north and hang out with Caroline's parents in Warsaw, Indiana. And the Warsaw economy is going gangbusters. It's just awesome. There's people up there with great jobs in the healthcare business space. And who knows, maybe your uncle's knee replacement will come from Indiana.
They had you know how you put those little boxes on the wall with kind of memory things in the three-dimensional thing? They had the training room had a box like that of all of the developments of hip and knee joint replacement. It made me think of Warsaw, Indiana. It's hard to believe that in our home state here, a lot of that technology that's added mobility to people happened right here and really in the smaller parts of Indiana.
Yeah, I think it makes a lot of sense. I mean, you've got manufacturing background, and a community decided to shift away from automotive and go cutting edge. And so that gives me a lot of hope for little Indiana towns.
Absolutely. Absolutely.
Keith, are you driving the stock market conversation today?
Yeah, I can do that. I am a bull. A bull is one who thinks things are going upward. I can shift in a time. In any period of time, I can change my opinion very rapidly. Let me share my screen to the market here. Let's see here.
You weren't on the call when Amanda covered that. The bulls and bears. That was so good.
Nice
Talking
work,
about
Amanda.
A bull going upward and a bear coming down.
Attack up. Yep.
Yeah.
Good stuff.
So you are optimistic, Keith. That's what I hear.
I am optimistic for a lot of reasons. I just think that when things are difficult, there's just two kind of ends to the barbell. Some people get very, very pessimistic, and others, or that other end, they get very, very optimistic. They think, what's the risk at this point, and what opportunities do I see out there that I can capitalize on? And I think Churchill said something to the effect that he didn't see the point of being a pessimist, because you can be an optimist or a pessimist, and if you're an optimist and wrong, you get to the same place as a pessimist who's right. So, so why not go? It's like in a baseball. I know I like to do sports analogies. As a baseball analogy, is I always, when I played baseball, I always thought it was the worst possible thing to go up to the bat, to home plate, and not go out swinging. Like if you got called strikes on you, and so being an optimist, I mean, if you're wrong, at least you were swinging, is what I think. So, yeah, and I'm not like if you look at this chart, this is the NASDAQ. These are the kind of the high tech stocks. If you know, we were not optimistic right here where I'm circling. We were anxious, and we were moving money away from the market, and then we again started to get more optimistic sometime right in here. And so, yeah, we're not permanently optimistic. We can, you know, identify things that really make sense. But if we look at the last 2 or 3 weeks, this is probably 4 weeks from this line right here over, the market really, it rallied up, and then it kind of had gone sideways right here. It doesn't look like it, looks like a zigzag, but if I flip this over to a weekly chart, it kind of, you can just see how these lines here kind of go straight across. So the activity we've seen the last month in the market has been really healthy for the market, because if Luke Air Force Base is, I think, in Western Phoenix, and back in the early 90s, a buddy of mine was doing his pilot training there, and they didn't have the security then that they do now. And you know, I was on the Air Force Base, and I could walk literally out on the runway, and nobody was going to do anything then, which there's no way that could happen today. But those, I don't know what those things were. If they were F-15s or F-15Es or what, they were just the baddest of bad planes. And those pilots, they could go like this, and then all of a sudden they would just shoot straight up. I've never seen anything like it. And they could only do that for a while though, right? Like I didn't do well in the sciences, but something about physics says you can only go up straight for a while. And then when they would stop, they would come down like that. Well, that's kind of why we don't like to see this arc or this angle here to keep going out without stabilizing for a while. And so this last month's activity has been healthy. If it did it for another month, I wouldn't be disappointed. Your statements would probably be flat, and you'd think that nothing's going on. But this kind of activity we've seen since April timeframe, when the market bottomed out. It's not sustainable for the next 24 months or something. But I think there's probably enough anxiety and bad news out there that the media will be able to kind of keep us kind of going flat for a while. I'd like to really see this red line kind of go up to about 10,300, and the NASDAQ stay right there. Any thoughts on the NASDAQ there, Doug?
Well, you know, one of our research partners that we like to gather information from, they pointed out here recently that the summer months, especially July and August, can be slow. It doesn't mean they will be slow, but it does historically mean that we've had just some seasonality inside the stock market. And so I wouldn't be surprised to see this level off a little bit, even through September, and allow the market to digest some news. We're in earnings season right now, and so I'll be talking about that a little bit later on in the call. But as earnings come out, the market's just trying to figure out, what are we going to do with this information?
We're also in a 4-year presidential cycle, and I honestly haven't heard much rhetoric about that. Normally, we would have been bombarded by now by all that stuff. And so I suppose as November approaches, there'll be all kinds of anxiety, which would probably, human nature and their behavior and emotions would cause this thing to probably trade sideways. If it did take off, that'd be a little surprising to me. My expectation is this will probably move sideways for a while. Let's take a quick look at the S&P 500. That's larger, more established companies. You've got, good good companies that are trying to push that thing upward, and then you've got companies that I don't want to mention GE is just been a laggard, but like companies that would, what they say, bring great things to you, not to your portfolio. They would.
Nice.
They could get you some old-fashioned light bulbs, maybe, but those sort of things pull against these things. The difference probably between this and the NASDAQ is in the NASDAQ, where you've got those technology companies, they don't linger on like a General Electric for decades. Those technology companies, they are like 4th of July activities. They will shoot up to the sky, and then when they die quickly, and they go out of, you don't see them for the next 30, 40, 50 years like a General Electric. And so that's the NASDAQ processes that kind of life thing a lot faster than some of these S&P things. And so you've got some very good companies that are pushing this thing upward, and you've got some things that are pulling downward on it. And the airlines and financials are the things that are pulling downward on these. And so we hit this 3,200 level back in June, and we hit it again right here. What day is that? I can't get my cursor to hit there, but that was yesterday. So we were at the exact same level yesterday as we were a month ago. And again, that's healthy activity. I know you'd like to see your statements go up every month, but to go sideways like that just lets some of those profits stabilize that you've made in your accounts and give the market room to grow. So yeah, it looks relatively healthy to me. What are you thinking about earnings, Doug?
Well, just to back up a little bit with earnings, I have great empathy for the weather forecasters out there. I don't watch the news anymore. If you're watching the news and you have your favorite weather personality, you stick to them, you trust them. And, I just have great empathy for them, because what they're trying to do is give a forecast, give a prediction. And if they're going out 10 days, the chances of them being wrong are higher than if they're going out for Saturday morning's forecast. And so as we get a little closer to a company's fiscal year end, which basically just means it's their last quarter, it's when they judge their year results. Apple, for example, their fiscal year end is in September, end of September. Whereas a lot of companies, the end of their fiscal year end might be December 31st. And so as we get closer to whatever that fiscal year end is, the analysts are going to be more accurate, because they've digested all this news, all this data. And so this quarter, I think, is one of the most interesting quarters I've ever seen in my 20 years of doing this, because with COVID, nobody knows. Nobody knows what this is going to look like. The forecasts, they're wondering, what will this mean for a company that makes cereal? What will this mean for a company who's got a piece of technology that's going to be used in schools? And so the analysts are really working around the clock to make their forecast right now. And so a stock, an individual stock, you could have a surprise where it might jump up 15 to 20%. It might go down that. And so for us at Gimbal, what we're really striving to do is listen to the market. And so whether it's earnings or whether it's the presidential race, political things, yes, we care about them, but we're really focused on listening to the market and then reacting to it. And so as we digest earnings, which earnings have been surprisingly decent, then what we're trying to do is say, okay, where do we want to position your portfolios for the future? And so you're going to see some movement, you're going to see some changes inside the portfolios from time to time, and that's really what we're trying to do, is capture the momentum of what the market likes.
That's a good word, Doug. And we have clients with different strategies that we manage for them, and so they're going to get different results on their monthly statements. And one of the strategies we've had over the years is a dividend strategy. And I think the market is talking to us about dividends, and whether or not we listen to what the market is telling us, that's a whole separate issue. We've got a number of clients that have retired from a utility, and utility stocks historically have been a place where you didn't really have to think about them, and yet I think the market is telling you that you need to beware, pay attention, don't just think that things are going on as normal, which is, if you retired from an electric utility, for example, and you've been getting your dividends for all these years, it would be a psychologically and emotionally hard thing to reevaluate whether or not I hold on to this thing, because my dividends have been going pretty consistently.
Well, and our dividend portfolios have just been great over the last 10 years. And one of our research partners out in New York City has been a phenomenal resource for us. But this year, the dividends, those stocks just haven't looked like the NASDAQ. I wish they did. I wish they looked like your neighbor's portfolio or whatever they're doing. So that's so good. But one of the key recipes for success, I think, with money in general, is if you have a plan, go with it.
Yeah. And
there's going to be times where it's not looking the best, but keep going with it. And it could mean that here, what we're doing is we're saying, the utilities, they don't look as great as they have in the past. So let's just camp out in cash for a little bit. And by cash, I literally mean something that's not paying you anything right now. I wish it was. But sometimes a cash alternative can be just a good safety place to invest, because if we were to say, well, let's try and get a little bit more return, you add more risk. And for the amount of money that bonds are paying or CDs are paying, the risk reward ratio is just, it's a different day than it was even, 15, 20 years ago.
Yeah, let me show the folks that if anybody out there is in a dividend strategy. So this is what a non-dividend strategy has looked like since the market bottom, right? So this is had you had wisdom to jump in right here, move all your money, this is where you wanted to be. But again, the NASDAQ is a more aggressive strategy, and most people aren't able to have 100% of their money in there. So
these stocks too, Keith, just to point out, like the NASDAQ type stocks, the companies, what they're doing with their cash flow, instead of passing it on to you through a dividend, that's basically what a dividend is they're taking that cash and they're reinvesting it in new technologies or new plants or a new strategy. And so that's where they're getting their money to continue their research and development.
Yeah, and dividends, I have a tendency to have a little sarcasm, and Charles Ponzi did a Ponzi scheme back in the day, and you guys can go read about Charles Ponzi, but in my opinion, dividends can have that same kind of an allure. Corporations can send you a dividend and not earn that money, and so it could be just sending you money out of their checking account, and you think you're in a safe place. But if you sent me a check every month, Doug, out of your checking account and called it a dividend, before long, you're not having money in your checking account, and I'm going to have all your money, right?
And that's a great reason why, even during earnings season, one of the things we pay attention to are revenues.
Yeah.
Sales. We like to see sales actually happening because of Keith's point. If somebody sells a building, or if they're taking the money from somewhere else and paying you a check, you got to have some sales to keep the company going.
Yeah, I'm going to pick on a company here, so don't get your feelings hurt if you like this company. I'm just going to just show you this. This is a traditional utility. It's a company called AT&T, and be patient with me here.
I'm not sure many of our viewers have ever heard of this company.
Well, I bet the fact of the matter is your kids haven't.
That's
right.
That is true.
And they may never hear of it. They may absolutely never hear of this company. And so
That's a
and I don't
wild
want to hurt
thought.
anybody's feelings out there that loves this company. I'm just saying, what have they done lately? Like you could tell me what Apple's done lately. So here's what this stock has looked like. I'm pulling up a monthly chart. So this is 1999 over here. It was $60 a share. This is 2007. It was $43 a share. It hit $43 a share again in 2016. It was $40 a share in 2019. If you were going to say, hey, if I was going to say what direction is this stock generally going, I'm guessing you're not going to say up, right? But they've continued to increase their dividend.
That's right.
And so how can a company increase their dividend if they're not making more profits? And that's what this over here, these numbers here are sales and profit numbers. And those numbers are dropping. So it doesn't suggest they're going to have more dividends in the future. They may be able to raise them for a while, but if you don't have more profits, you don't have money to do that. But I'm just using an example of a traditional utility stock because it's paying $2, a little over $2 a share on a $29 stock. The market is suggesting to you that that's not a sustainable dividend, is what the market is telling you, because dividends aren't that high. So here's just some portfolios of dividend-paying stocks and how they've performed in the last few months. And just to give everybody a flavor of that, I know I'm running out of time here, but this is
You're good. You're good.
Yeah, this is a utilities index. Peaked out at $32 a share. This is in February, and then it tanked almost 33% here in March, and it's still not come back to the level that it was. So those clients of ours that have dividend portfolios, that's a strategy that you opted to get into, and that this is the sort of performance that's been going on compared to what I showed you on the NASDAQ. Here's another one that I saw. I was just looking at this one, and again, it's a portfolio of dividend-paying stocks, and it looks really similar. See how it peaked? This one fell again, same amount, and it's still not back to where it was. It's probably back to where it was a year ago. And then this one is real estate investment trusts. These are rentals of property, generally is what it is. And you can see that the market is telling you they don't believe that these organizations are going to be able to pay rent like they have in the past. And so the market's suggesting if you want to chase after dividends, you may have to be a lot more patient than you have in the past with these. And there's one more that I think this is maybe a foreign one. Let me see what this one is.
Yeah.
Yeah, global. Yeah, so this is global dividends. So this one's even, I think
Doesn't
in the
look
past,
quite as good.
yeah, in the past I've mentioned most economic recoveries have more of an L shape than a V shape, and so you can kind of see an L kind of here rather than the V that you saw with the NASDAQ. So that's what's going on with dividend stocks. We're very cognizant that a corporation needs to earn more than it pays out, and the stocks that we're looking to buy, we're making sure that the earnings do cover the dividends, so they're not sending it out of Doug's checking account too.
Well, and maybe what we cover next call, I think this has been great. This has been great to look at the earnings, the sales, and how that affects a company and the dividends, research and development, what's added back into it, and what does that do to a stock. Maybe even next call or in a few calls, we touch base on the balance sheet and the importance of the balance sheet, because many of these big dividend companies, these companies that we all have grown up with and love, we want to make sure that they're healthy, just like your own balance sheet at home. Your assets minus liabilities, what do you have left at the end of the day? And those are things that we would just be more than happy to talk with you about on a personal level. But on a company level, those are things that we're constantly looking at inside of our dividend portfolio to make sure that we have good health there. There are some other alternatives that we can look at, and I know we've been talking about some of them recently. Every now and then we get into the commodities, but Keith, you mentioned you had a thought on gold. Did you want to share that today, or is that?
Yeah, and I'm only showing you all a chart because a chart can give you a flavor of you know, if you're going to invest in something, you're going to be better off if it's angling upward, moving to the right rather than downward. Historically, the
I
trend
like
is your
things that
friend.
move up.
Yeah, yeah.
I like visuals too, so
Yeah,
that helps a lot.
Yeah, we were talking about the idea that you know, you can buy a penny stock, which is a low price stock if you want. We don't recommend those. It's hard for us to buy those for you. And if you track those historically, they tend to trend downward. But but with let me get to my screen here. Where's that share screen? So here is gold. This is an ETF, and we're not recommending you buy this. We're just saying this is the trend that this thing has done. I can, I think this lets me put a, no, that's not what, to put a kind of a trend line on here. Let me get smarter than the system. Temporary line. So if I pick this point here and connect it with where we're, you know, so if I connect it right about there, that's kind of about the trend that this thing's been going. That's an upward trending line right now, and I think
That's strong. Golly,
yeah,
that's strong.
that trend line suggests that it's probably moving upward for a while, but you never know. And we're not, again, that's why we're not recommending this to you if you're listening. But what I wanted to point out is my experience in a number of years of helping people with their finances is when this thing is trending upward like this in the short term, there's usually a kind of crisis or thing going on in the world or in our particular economy, and this is a place where nervous people tend to go to try to lock in value, and so when this angles like this, it tells me personally that we probably have a very anxious culture, that there's anxiety out there, there are people struggling and suffering, and so it's not always good when gold goes up like that. But I think the main thing it tells us is we have really a compassion for you, our clients and our friends, that we know that this is an anxious time. We care about you. We think the world of you. And why we always tell people to turn off the news is because all the news does is it keeps angling that line upward. It's gasoline on people's anxieties. And that is not healthy for any of us to have our anxieties flamed like that. And so we are for you. We love investing. We find passion in that, but we also understand that if you pay attention to economic things, you can kind of get a flavor for what's going on specifically in people's lives as well. You know, I think I mentioned a few weeks ago, if you look at the agricultural ETFs, you can tell that farmers are struggling because the price of most of their, at least the crops around here are angling downward, which makes it harder for a farmer to make a living. So we just want you to know that we think the world of you. We want to be sources of encouragement, and we want to be hope in your life. And so just keep the faith this weekend. Get outside, find something to bring a smile to your face. Go for a car ride, whatever. But we're just here to serve you.
That's a great point. Doug, you got anything else to wrap this up?
No, thanks for joining us, everybody. Always appreciate your feedback, and I know some of you send us an email or give us a call letting us know topics that might be of interest to you. Feel free to continue to do that. If we didn't get to your topic today, my apologies. I want to assure you it's on the radar. And so just keep us in the loop, and communication is our best tool. We've got a lot of great investment tools out there, but our communication between each other is really important so that we know how you're doing, what you're seeing out there, and then, you know, what's changing in your world. We really want to know about it. And so just thanks for tuning in.
Thanks,
Y'all
guys.
have a great weekend. Yeah. See ya.